It's a bit drizzly and rainy today, wherever you are. Hope you're well. Hope everything is awesome on the 30th of June. It's a Wednesday, 2021. And hey, it's nearly the end of the financial year. Tax time is looming. So hopefully everyone has got themselves organised for the end of fin year. While everyone's jumping on and things are warming up. G'day, Bob. How are you, mate? Morning, morning, morning. Morning, James. As things get rolling, a quick hello to and a quick welcome back to all of those returning who are regulars, like the Jameses, the Bob, the Sharon, Alison, usually a few regulars in the house. So good morning to you guys. Welcome back. Thanks for joining as always. And if anybody's new, give us a shout out in the chat. If you're a bit shy, that's okay. Just say hello. My name is Jason Witten. And here we go. Look at that. Good to see you, James, from up there in Tamborine. It's probably a bit wet up the hill there, mate. I'm down the hill, not far from you. Ryan, g'day, mate. There you go. Jason's lurking around. Good to see you, Jason. That's good. All right. We've got a few people online now, which is great. Hey, Craig, how are you, brother? All the way from North Queensland. As we go along. So, yeah, anyone who's new, g'day. Jason Witten's my name. Been property investing 20 years. Coaching property investors over 18. And we hang out each morning, Monday to Friday normally. And we talk about property investing, try and share a little bit of wisdom as we go along. No, my love, up and about. Early bird gets the worm. All good. So listen, hey, it's tax time. Taxes, taxes, taxes. And it's an interesting one about taxes. It gets a little bit of, people fired up. People sometimes... I get a few comments when I talk about minimising your taxes online that, minimising taxes, you shouldn't do that, et cetera, et cetera, et cetera. And at the end of the day, for me, I don't know about you, but, being taxed for my income, being taxed on my effort, the work that I do, my daily income, sometimes I find that a little bit offensive. For the most part, I would probably agree with Kerry Packer and his words that we shouldn't be donating extra to the government or any of the governments because they don't do that good a job with the taxes we pay. And it's an interesting conversation, but it does evoke a little bit of, interest and excitement and passion from people when I talk about reducing our taxes. So let's just quickly touch base because it's the end of the financial year and it is tax time, and make sure that we're on the money or making sure we understand, some of the tax options or ideas that we have been, able or are able to work on if we're property investors, okay? So it is tax time, and what are we going to do about minimising our taxes? Tax time, and making sure that all of us, all of you guys, are on the money when it comes to what can we do, all right? So number one, when it comes to tax time as property investors, gang, certainly in the world of PAYG, if you're a PAYG, make sure you get all your depreciation done. Now, depreciation is everything in your property, all of the building, the fittings, the carpet, the lights, the walls, everything, the stove, everything in a piece of real estate depreciates in value because it gets older. Basically, this stand, I bought it for $50 and 1 year later, it's now, if I was to sell it secondhand, it's now, I can only sell it for 30 bucks. So I've technically lost $20 in depreciation, which is great for tax minimization, gang, because you can use that depreciation, and it's what's called a paper loss, not a cash loss. Not a cash loss, all right? So paper loss, not cash loss, is what we're looking for. One thing that's really important, gang, if you haven't had a professional depreciation schedule done by a quantity surveyor, okay? And if you're sitting there right now going, oh, I wonder if I have, then you haven't, right? And you're missing out on tax deductions and claims when it comes to your property, okay? And right now, you can go back 2 years if you haven't claimed it properly and get those tax deductions back in your pocket. Gang, you must do that. Now, you must get a professional, proper depreciation schedule, okay? Now, you can get that from a couple of places. We use a company called Depreciator. Look them up online, Depreciator. Tell them you're with Positive Real Estate and they'll give you an absolutely cracking deal, okay? They look after you, gang, as you're going along. Hey, morning, Stu. Good on you. Morning, Shaquille. Morning, Adrian. Morning, Andrew. There's Alison. Yasmin's in the house. Yasmin has a good question. If the property we buy has one supplied, is this okay? Now, listen, 9 times out of 10, Yasmin, the answer is no, okay? Because the one supplied was done when the building was not complete, okay? It was done in anticipation. It was a best guess for the property, and a lot of developers get them done for investors as a little bit of an incentive, but it's not the right one, okay? So, but you can, if you've got that one, you can send it to Depreciator, and it might get you a little bit better deal because they don't have to do so much. But there's they have to go to the property, or at least get a full list of the finished completions or finished inclusions on completion to get you the most tax deductions, Yasmin. So the answer is most likely no, it's not good enough, and you're missing out on thousands and thousands of dollars worth of tax deductions, okay? Just make sure that, and it's probably gonna, listen, a brand new one might cost you anywhere between $300 and $500, but you'll get tens of thousands of dollars of deductions over the lifetime of that schedule. And the schedule lasts, you do it once for your property, and that's it, it's done as you go, away you go. So, Christopher has given us awesome advice. Watch out for the dollars flying out the door, and make sure you keep an eye on your real estate agents as well. Yeah, you're dead right, Christopher. You know, often property management agencies who've got sales agencies attached to them are really not focused often on the quality of the property management as you go. Shaquille's given a shout out to Depreciator. We like Depreciator. They give the Positive crew a nice discount. Whoever this is using BMT. They're the two people we've used, Depreciator and BMT. BMT don't give you a discount if you're with Positive, so but they're very good, gang, as you go. I've got people dialing in here. I think this is Fenton. Hang on. I was going to hang on 2 seconds. You guys know Andy, don't you? Andy, I'm on a morning live, mate. What are you doing?
I thought I was going to catch you before the live.
Well, I'll call you after this, all right?
I'll jump on and join you.
Let me send you a link, Andy. All right. Andy's joining us on the morning Facebook Live. It's tax time, Andy. It's the end of the financial year. See you soon.
I'll see you in a tick.
Bye. All right. Well, that's cool. Stand by, gang. We're going to have a guest pop on. It's Wine and Wisdom on Wednesday. There you go. I'm going to get Andy to join us, and we'll see if we can talk about that, because Andy is in the world of financial planning, and he's very capable when it comes to end of financial year as well, when it comes to a little bit of tax time conversations, gang. So hang out. We'll get Andy to fly in and say hello, and we'll see if we can make it work. So, but yeah, listen, gang, depreciation, an important one, certainly for me, certainly for you. As we go along, make sure we get our depreciation in the kitty. Now, for some of you guys, the year's done. Well, it's almost done. But here's a couple of ideas if you want to get some tax deductions this year. Certainly, if you've got some spare cash or capital, you can do a couple of things. All right. Oh, here we go. There's Andy. Let's see. All right. I'm going to hang on 2 seconds, Andy. Main camera. You know what I've got to do? I've just got to unlock the current scene, and then I've got to add Andy in. There you are.
Well, there I am.
How
I
are
just
you,
realised I didn't have a coffee, mate, and it's the part of the Wealth Coffee Chat.
Yeah, well, welcome to Wealth Coffee Chats, mate. We're having a little yarn today. It's tax time, as you would know. You're busy at your end of the year as well. But what do you got for some of the callers this morning? I was just talking to my crew. Just make sure we get depreciation schedules done, proper ones, professional ones. The one that the accountant has a guess at is not professional ones. That's one thing that we make sure that is done. The crew are yelling out. They're glad you didn't cark it over the weekend. Me too. So,
Thank you. It's good. It's good to know that I'm wanted back in some places.
Mate, any tips from the front line for you? I was thinking if people had a little bit of spare cash flow, maybe some contributions to super. You know, what else at the end of this year? It's kind of almost too late to sort of strategize right now, get something done, but we've got a few days left.
Well, yeah, depending on whether you've got a self-managed super fund or a retail fund, and depending on what your capabilities are with bank transactions and things of that nature. So for anybody who's wanting to make last-minute contributions to super funds and doesn't have their self-managed super fund, call up the fund first, because you might find that the transaction may not hit until next financial year and you'll miss out deductions. Seen that happen a lot. So ring up the super funds first. You'll probably be on hold for a little while. If you're with an industry super fund, you'll probably be on hold all day. If you're with a retail fund, you'll probably get through reasonably quickly. And if you've got your own self-managed super fund, well, you've got to call the trustee. So make a call into yourself. The ones to look out for.
What about a couple of purchases?
Yeah, the two key ones for those of you who've got.
No screen.
Sorry, mate.
Just give us a shout out, gang, if you can see us or not. Christopher's saying he can't see us. You keep talking, mate. I'll just see if there's any issues here. I seem to be okay. Yeah. The old internet can see. Yasmin can see. You there, Andy? Maybe. Oh, Andy's disappeared. Maybe Christopher. There you go. Maybe. Yeah, there we go. Andy's on his way back. When it rains here in the Gold Coast, the internet just absolutely craps itself, which is so annoying, Andy.
Thanks, Will. The powers of technology lockdown.
Yeah, I tell you. Yeah, well, everyone's on the internet, so Andy's back.
Yes, Australia's online. The telcos are going, no, no, not again.
One of the things, Andy, at the end of the financial year, for a few of them, we can do a few purchases, maybe buy that laptop that you were going to buy, pay some interest in advance. Certainly you and I have got a client that we put together a little strategy. They had a little bonus at the end of the year, and they've paid a year's worth of interest in advance, which is great. So they got the tax deduction now. Any other tips, at the end of this fin year with 2 days to go, Andy?
So a couple watch out fors, and I've already had a few discussions this morning. It's amazing, mate. It's like the phone's been ringing since about 7:30 this morning. It's like, can I buy this today? I'm like, why didn't you fucking buy it about a week ago? But anyway, so with major assets, you got to take delivery. So that's E1. So if you're going to go out and buy a car today, make sure that you take delivery. There's been a couple of people who have gone, I've got it, bought it through Ford, but we can't take delivery until next year. Well, you're cactus. You won't get the deduction until next year, even if you pay for it this year.
Yeah.
So those major assets, just be super careful. Otherwise, do what Jason and I are doing, and jump on, have a look at the end of your sales for all of your podcast equipment and where is it? I can't actually get into the shot. Cameras, podcasting equipment, all of that sort of jazz.
Yeah.
What else is there? Make sure about your contribution. Pension fund. So for those of you who are running pensions, and you will know what I mean if you are, it's a self-managed or a superannuation vehicle which allows you to draw an income from it. Also allows 0% income tax and capital gains tax to $1.7 million worth of assets as at 1st of July. And sometimes if you're in pension mode, some people haven't always taken the right amount of pension. So if you need to be in full pension mode, you have to be at least taking your minimum, which for most people is 2.5%, but double check your minimum, make sure that you've drawn enough out of your superannuation account. So that's the one where people get trapped. They think, well, I don't need any more money this year, so don't take it out. What are some of the big ones that we're getting asked about? If you're about to go through $500,000 worth of funds in your super fund, whether it be self-managed super fund or not. So if next year you believe you'll definitely be above $500,000, then you should be definitely contemplating, if you're going to have a big tax bill, you should be contemplating whether you access any of your carry forwards. So the legislation stipulates that unused superannuation consent contributions like employer contributions, salary sacrifice contributions. Oh, there's a property one. Don't let me forget the property one, Jace. If you haven't used them from end of year 2019, end of year 2020, so last year and the year before, any unused of your $25,000 concessional contributions, you can carry that forward through, including what's unused this year. And if you're under 500,000, so if you're going to go above $500,000 next year, you lose that. You can no longer do that. So this might be your last year to get those extra little tax deductions in.
How long can you carry them forward, Andy? It's 4 years, isn't it? Is it 4 years?
It'll be 5 years, but at the moment it started in 2018-19 tax year. So that's the first year that you can carry forward from.
Oh, that's great. Well, there's a couple of people saying hello. JY, how are you, mate? Good morning to you. Pammy's got a quick question here. So with interest payments, how do you differentiate the payment with IA? Is that interest only, or is that if it can be accessed again as redraw, or does it have to be cancelled? So that's a good question, Pammy. It has to be paid. It's not It certainly doesn't go into your offset account. It has to be paid to the bank, so the bank receives the interest. It won't go into your redraw at all, because only extra payments go into your redraw. This is paying the interest in advance, and then that's how you get the tax deduction. However, Pammy, you could circle round later in the year and do an equity unlock potentially. So no, it won't be accessible immediately. Okay, so as you go for that sort of stuff. Christopher's given us a little bit of a shout out. There's a few people in here, Andy. Certainly you and I talk about the world of, being efficient with our money, and super is always something that we're talking about. It's an arrangement with the bank, Pammy. Yep, absolutely. Give the bank a quick call, but sometimes, Pammy, some lenders or your loan won't allow you to pay it in advance. So you need to find out first, paying years of interest interest in advance. So give them a quick bell if you want to do it. And like Andy said, make sure. Actually, Shay just put a post in. It's actually the last day of the month. I thought there was a few more days left, but anyway, I'm a little bit off the pace, gang. So if you're going to do something, you better crack on today. Yeah, there you go. So it's interesting. So, but Christopher's got. You've done a bit of work with people in this space, Andy. I know you've got a couple of clients in this space. So Christopher runs a horse stud. He's obviously thinking about trying to get some stuff into super. So yeah, it's interesting, Christopher. You've got to have a bit of a strategy, a plan around that. Maybe reach out to Andy and maybe see if it's appropriate to have a bit of a chat one time. Because obviously that's a complicated question and maybe a long-term answer. A long-term consistent answer as well. But getting money into your super, Andy, you and I both know, at the right age, at the right time, it's a fantastic place to park a little bit of your resources for efficiency. So so the contribution's going up 10% next year. So 10%, gang, 10% of every single dollar that you earn is now going into your super. That's a pretty significant amount. 9.5%, 10%. It's going up there, and now you can do. Is it just gone up 1.7 million, Andy? But one person tax free and super. That's the number, isn't it? Now 27.
That's the one.
Yeah. So there's some pretty interesting as you go. Good question. If you pay a year's worth of interest in advance, does that mean you don't pay interest next year, or there's an additional payment? The answer is you don't pay interest, but you can. Okay, so if you've paid it in advance, it means the whole year you don't have to pay the interest. Now, it depends if you've got a principal and interest payment. Whoever's asking that, you might still have to pay the principal if it's a principal and interest payment, gang. So just keep an eye on those things. But what often people will do is that they'll pay the interest in advance and then continue to pay anyway that year because they had some spare cash flow. Often it happens when people get bonuses, gang. You might be at work and the work's had a good year and you might get a 20, 30 grand bonus, put some extra into super, pay some interest in advance and get ahead of the game a little. That stuff is quite useful as you go along. Anything else, Andy?
Oh, mate, there's plenty. There's plenty.
Well, folks, join us at Wealth, Might and Wisdom on Friday.
I was about to say, look, this should be stuff that all of our listeners will be all over. But a couple of last-minute ones that you can think about. I'm just going to throw one in there, which is a property one, which for some of you might actually set some brains researching for the whole day. They ring up work, say, sorry, can't come in, got to research. And one of them is the home deposit, first home buyers, home deposit. So if you have a strategy that you want to buy a home in 2-3 years or an investment property in 2-3 years, There's some things there about the first home. It's meant to be your principal place of residence, but you've got the ability to put more money into superannuation on a post-tax basis and start accumulating that for the first home buy. So that's one. I'm not going to say any more because it's reasonably complex, but if that's you or you're doing it, remember to put that extra contribution in, or make sure that you go and research it. As a matter of fact, if you are a first home buyer, I reckon you should be researching it anyway, and maybe chatting with Jace's team and your advisors in regards to how to do that, or research it yourself. The other one, if you're a business owner, this is when you're going to be the distribution forms from your accountants. Already had these questions this morning. Andy got sent these distribution things for our trust. We've got to sign them, and where do we put it? Do we put it into the bucket company? Do we take all of the distributions ourselves? What's the consideration behind that? Well, from my perspective, this doubles down the next one, which everyone should be thinking about as well, is that if you can manipulate your tax, which is, I don't mean in an illegal way, I mean completely legally manipulate your tax. So you might leave some in a company, you might distribute it through to yourself. If you think about what your moves are for next year, if you're chatting with Jason's team and you're looking at buying properties next year, you may need to make sure that you're not and bankable. So you need to show a reasonable taxable income. So one of my advices today was, leave it at 180. I'm happy even this year if it's up at 200, because we're going to be doing a lot of borrowing this year. So just think about the future as well. I think that's one of the key things, is that sometimes people, especially if you leave it to the last minute, they go, shit, let's do all this to save tax. And then you put yourself into a position where you can do the things that you want to do next year, because you made a snap decision at 30 June and dumped it all in. And by the by, that's one of the great reasons of having advisors in your team, or great relationships with your accountant and the property team and advisors in life, because ultimately, yes, you do have to make those decisions snap sometime, but you should have teams who are looking out for that future. Right, who are going, let's make the snap decisions, but we're making them because we already know what's going to happen the next 12 months.
Yeah, dead right, mate, dead right. Well, there you go, folks. It was good for Andy to accidentally drop by. It was perfect timing at the end of the tax year. But Christopher's said, can he connect with you? And if he wants to connect with you, Andy, maybe over just a direct message in Facebook, just Andy Fenton. You'll find him. He's the real Andy Fenton out there. So just hit him up on Messenger.
Well, probably easier to go through Fenton Financial Facebook page, because you might end up hitting up some random Andy Fenton out there, and they'll be like, "What? Yes, I can help you. Of course, I can help you. Email me and send me $1 million."
Absolutely. All right, awesome, mate. Well, thank you for dropping by, and Andy Fenton.
Good to be
as always. Good to hang out, and thanks, folks, for joining me this morning for a Wealth Coffee Chat. It is the end of the financial year. It is the last day, so I've confirmed that. I've looked at my calendar. Shay was right. She usually is, and we'll call it done and dusted for a Wealth Coffee Chat today. So thanks, folks. Join me tomorrow for another one. And bye for now.
Happy New Year.